Well, good morning, everyone. It must be Tuesday.
Yeah. Good morning. How you doing, Ed?
I've been tired from traveling so much the last few weeks, but got a lot of information, a lot of good stuff to get moving on stuff. So,
Yeah. What were your conferences on?
first week was this thing called Funnel Hackers, what has to do with making funnels. But I do a lot of webinars, and I wanted to make some stuff better for that. And
Gotcha.
so that's why I went and figured that stuff out. And then the second one was called Traffic and Conversion, which is about making traffic and converting it. It's where I get all my ideas for actually doing, lives and Facebook and TikTok and stuff like that, what people are doing. Number one thing they say not to do on TikTok is dance, but we'll move on. Don't do these things that some of the people we know are doing. Yes, you're going to get views, you're going to get that, and yes, you will get some business, but long term, it's not where you want to be.
That's going to hurt your reputation long term.
Yeah.
If
some of the big guys did it, that would be one thing, but they're not. They might do it with their daughter. That would be one thing.
Your demographic's going to be 25 to
which is, one of the things they stated is you need to hit that demographic on TikTok in order to get your thing to go viral.
Gotcha.
You follow me? They need to like it and whatever. That's why it kind of works with them. But they're saying do more of your personal stuff and then your business 20% of the stuff, not 80%. But anyway, move on. We don't need a TikTok class right now.
Yeah.
All right. Let's look at the market. Rates have been improving, which is good. Hopefully that we'll get back to a decent rate, which, everybody's worried about rates, right? And I think we talked about it before the show. Should I wait until rates go back down? No, because as we said before, I think we talked about a couple weeks ago, where when rates improve, that means 1 million people come back in each time. I would say each 1% improvement, 1 million more people come back in.
Yeah. Well, and we still have, record low inventory, 2.1 months.
That's nationwide.
Well, I was going to say here, at our sales meeting, we had like 2.1 here in Modesto.
Yeah, but that was including pending.
Yeah, including pending.
You can't include pending.
Yeah, that's the way they get.
That's just wrong. But if take out because you can't buy it again, it's already pending.
Well, unless it goes back on the market, right?
Yeah. Well, what's that? 1 in 10, 1 in 20, 1 in 50 go back on the market.
Kind of depends these days, right?
Right. I don't think
if they don't lock the rate, then they might not qualify and it goes back. Right.
Well, there's a lot of people who dropped out of the builder market because of that, but we don't have that in our area. We didn't have a lot of homes being built. We have some homes being built, but not a lot like they did in Arizona, Texas, Las Vegas, those different places that everybody went to get away, which are now having trouble because people are going, what? You got a flood in, Las Vegas? What? You got hurricanes in Florida? Texas is really hot and humid. Yes, that's what we said. But anyway, a lot of places in Texas, like Austin, is getting a lot of things on the market because the fact that the issue is the taxes have went up so much, right? So their taxes go up each year, period, at a 10%. So every 10 years, your property taxes double. So a lot of these people about Airbnbs are going, we're selling these things.
Yeah.
Because the taxes are killing me.
Yeah.
So anyway, so our inventories are not going to go up. I got to stop saying that word. So I just noticed I said it again.
So
yeah, there you go. Don't worry about, we're still going to appreciate at a normal level, which is good. Like, I'm hoping we get to 4 to 5% appreciation. That way everybody can buy and things change hands. And we didn't go up 66% in the last 3 years like we just did.
Yeah.
Which makes it a much more unaffordable for people, which means they're going to have to rent, which means they're going to be, and their rents keep going up. It's not a better situation. It's better to bite the bullet, buy now, pay higher in a payment, and just wait to refinance in a year and a half, even if it's 2 years. And we were talking this before the show about how you had to pay 25 to 40,000 over asking before. And the difference now is you're paying it in a monthly payment now, which means say that you had a $500 difference between what you're going to buy before and now. You could go up to 5 years difference on that numbers. Yeah. Not that you need to, but I'm just saying that could be. You need to maybe relook at your budget, change some certain things around to focus on what you want to do. The other thing is if it was $1,100 a month difference, because that's what a lot of people run into, what they were looking before and couldn't get into a house, and now they can because there's not a ton of inventory. We're not even back at the pre-pandemic inventory, but you're able to get in and buy. You just have to look at how do you change certain things and stop worrying about what happened in the past that you missed and focus on what you can get today.
Well, yeah. And, like we were talking about before the show, just doing the quick math, right? Like you're saying, if say your payment's $500 more a month, but if you were in the market of, 6 months ago in like the last couple of years where you came in 30 grand over, it's going to take you 5 years to make up that difference. Like you said, more than likely rates are going to be down. You refi out of that, right?
Right.
But also back then, you're not only were you throwing like all the cash you had, but you were waiving contingencies, right?
Right.
So you were always running the risk of, buying a house that actually had a lot of serious defects,
right,
and not even knowing it, and that costing you a ton of money out of pocket too.
Down the road that you didn't know about.
Yeah.
Because then contingencies are there to protect the buyer, period, not the seller.
Yeah.
And so you have them back. Plus, you can get money for closing costs now, right? Don't let the seller cut the price of the home and get that money towards closing costs. You'll benefit from either buying the rate down or just paying your closing costs and keeping your cash and not buying the rate down. Because I'm kind of against buying the rate down because I see that we're not going to have an easy stop to what we're doing, right? What they're saying with everything with inflation, it's going to, soft landing.
Mm-hmm.
No, we're going to fall flat on our face with this, and it's going to hurt. So that means rates will get better and get lower because that's just how they have to spur the economy down the road, which is going to be 6 months, a year from now, could be 2 years from now, but it's going to be a different world. We might not get back to 2 3/4 or 2.5, but we're going to get in the 3s to 4s.
Yeah.
So Fannie and Freddie were saying that we're going to be back there next year. Well, I don't see that yet. We'll know more in November. I'm not saying wait till November. Once October is over and we see the inflation numbers for October, I think each month it's getting better with the inflation, but it's still going to be high inflation.
Yeah.
Did I answer any questions that you didn't have?
No. I just, I've been getting that question. I have a couple buyers that said, we're going to go and wait, and we're going to wait for rates to go down. I said, well, we can do that, right. I was like, right now we could obviously ask for a credit for a 2-1 buy down, but if you want to wait till rates go down, we need to jump on it. So as soon as we see a dip, we better get in there because
but how low rates go down, right? What's that mean?
Yeah. Well, I would, they're looking at something in the 5s, right?
Right. Which we were there a month ago.
I know.
Yeah. And but the problem is you never know how fast that's going to be. Actually, we were there over a month. I was doing 4 1/4 FHAs.
Yeah.
So when other people were doing 4 3/4. So yeah.
But it's that group mentality, right? It's like all of a sudden when rates are low, everyone wants to buy houses, and then we have tons of competition,
and you're going to get there I would say every 1% interest rate from here right now back. Once these change, it's millions of people coming back in, and then you're going to have that competition like you wish you would have jumped on it before. A lot of people got into contract the first couple months that never got into contract before because they got bid out. And now you have people who've been waiting for, time, and they want to wait. Okay. Well, what happened last time you waited? Did you benefit from it?
No.
The best thing to do is buy when you can, and you can now. It's just going to hurt a little bit. Stop going to Starbucks, stop going, eating out so much, make some changes, make a budget.
Well, and with any kind of investments, you always want to do the opposite of what everyone else is doing, right? So if not a ton of people are in the housing market trying to buy right now, that tells you it's the time to buy.
Well, look back at 2008 where everybody was losing their houses and then everybody was buying them, right? And those guys bought tons of homes and foreclosures and all this, and everybody else was like, real estate market's horrible. Yeah, and they're like, we're taking all this. Yeah. And right now, it is being said you're going to wish you would have bought now. Then in 5 years from now or 4 years from now, this is going to be the best time to buy in the next 5 years is right now. And people don't get that, and they need to understand that.
Yeah.
So
I agree with you, man.
Anything else you need to add today?
No.
All right.
Glad to catch up.
Yeah. Same here. Sorry. It's been a week or so.
No, that's all right, man. Hey, life happens.
Yeah, it does, doesn't it?
Mm-hmm.
Yeah. All right. Everybody make it a great day, and thanks for watching.
Thank you, Ed.